won't stop till I hear him say,
Alrighty, so heading into this trade breakdown, full top-down analysis, I just want to start by teaching you all how we gather our areas of interest as to where we're going to execute trades from here at CYPRX, and it all has to do with identifying retail money in the market, or at least where the majority of retail investors' orders most likely lie in the market in the form of retail trading patterns. You guys know here at CYPRX, if you've been watching our technical analysis for the longest time, or at least what we've been displaying to you guys on the YouTube channel, you all know that we attempt to trade against what the majority of the retail herd is doing. So in this full entire technical analysis deep dive breakdown, I'm going to show you guys exactly how. So pay attention to detail. Make sure that you all are taking some notes. I'm going to give you guys a little bit of a gem in the form of some psychological analysis here towards the end of the video breakdown. So stick around for the entire thing. And if these video breakdowns help you all out, please smash that thumbs up button and make sure that you are subscribed. We're also going to be doing and running a St. Patrick's Day discount code. You guys can enter in on our checkout page for our CYPRX mentorship program, the discount code GREEN15, all caps, and it should give you all 15% off of your CYPRX mentorship program. With that being said, let's dive into this detailistic perspective of how we were able to catch this beautiful risk to reward trade of a 1 to 3.5 on GBP JPY. You guys can see my MetaTrader entry again to show you guys that I'm actually taking these trades. I'm not just here back testing this price action and giving you guys falsified information. No, this is me actually taking trades in the market. My entry today was at the 160.361 psychological level. And I can go ahead in detailistic perspective now and show you how we were able to capitalize on this trade. I want to go all the way back to a screenshot that was shared in the CYPRX group chat from March 8th from one of our CYPRX superior traders, Justin. Absolutely phenomenal technical analyst, trader here in the CYPRX community. I cannot stress enough how far along he's come in his trading since joining this mentorship program. This is actually probably the most clearest on the hourly chart. Okay, so we're going to go on the hourly chart. We're going to go to a screenshot that Justin shared in the group chat where he had noticed an area of retail liquidity that most likely exists in the market in the form of this triple touch of a trend line, or this retail trend line trading pattern you guys can see displayed here on my charts, alongside of the screenshot that Justin displayed to the CYPRX students, where he had mentioned a major psychological level, the 160.00 psych level, where the bank and institutions had been buying from previously in this area during a London session. They created a higher low after gapping price action down on a Friday to Sunday overlap, and buying price action up before rallying and breaking all previous price action, showing us a sign of bulls in the market. Okay. But interestingly enough, how we trade here at CYPRX is by identifying areas of retail money in the market, or where retail order stop losses most likely exist. We know that the majority of retail traders trade some unrealistic, I don't even know what to call it, honestly. It's just stupidity in the market. This is not how market makers trade. Okay, they do not trade based off of support resistance, trend lines, double bottoms, double top formation. So you can imagine that there were retail orders that attempt to trade those ways, stop losses sitting beneath these lows. All right, so we were able to identify that all the way back on March 8th. So that was Thursday, if I'm not mistaken, Wednesday of last week, when Justin sent that out, just to show you guys how patient we are here at CYPRX to wait for a solid setup to happen in the market. So if you are an impulsive trader, I cannot stress enough, learn how to become a reactive trader, setting yourselves up areas of interest and waiting for the market to come into your areas of interest before you react to price action based off of a certain set of confluences. Now, whether or not you utilize our confluences here at CYPRX or somebody else's, just as long as you're attempting to teach yourself how to be a reactive trader, not an impulsive trader, you are doing what 90% of traders out there cannot do, which is reacting to the markets based off of emotional impulses. Okay. I cannot stress enough, controlling your emotions in this market with technical, psychological, and fundamental analysis, all in combination with one, is key to your success. So I won't go into a detailistic perspective as to how we caught this area of interest. It'll make this video super lengthy, maybe real quick. Okay. I'll just backtrack real fast just to show you guys this was a area of interest where London session was buying from a low, or at least a higher low in comparison to the previous one in the market where they drove price higher. Again, showing a institutional demand in the market. Why? We know that retail money does not have enough money to drive price higher like this on major currency pairs like GBP, JPY, right? So we know that there's institutionalized interest at this psychological level, breaking a major, which was the 160.00 that Justin had pointed out in the group chat. So we were all pretty much waiting for a significant pullback into this demand area, if you want to call it that, where market makers in the past during London and New York session, okay, you guys can see the New York Asia rollover, we're buying from in the past, all right, which also started that triple touch of a trend line you guys can see started here. So we're waiting for that area of interest to get liquidated and for institutionalized interest to pick back up buying from an area where they bought from in the past, okay? That's kind of a verbatim breakdown, small breakdown of how we generate our areas of interest. So highlighting from the candlestick bodies down to the wick on the hourly time frame, I extended that area over to the right of my charts, and we waited for price action to pull down into that area of discount you guys can see right here, all right? So with that in mind, now let's get into what the general average retail herd is doing, a couple of different things. I want you to really truly pay attention to sessions in the market. The market makers trade based off of a time algorithm. All right. Each and every single trading session has a specific allotted amount of time to make or gain or lose money in this market. All right. And so with that knowledge and information being said, you have to take a couple of things into consideration. And that is that the average retail herd is usually chasing the market. That means if the market is trending down, all right, I'm just going to give you guys a little bit of an overview on how we perceive the market here at CYPRX. If we see the market trending down, retail trading orders most likely exist in these down moves here or these lower highs here, whereas institutionalized orders exist at highs, okay? They don't sell halfway through a down move. They've already started selling from all the way up here at a premium, okay? So what does that mean for us here at CYPRX? If we're looking to do the opposite of what retail is doing, all right, we're looking to capitalize on buying into retail trading stop losses, which exist above these highs from retail traders that are chasing a bearish market. Now take that into consideration in comparison to what it is that I'm about to show you guys, is that also we know here at CYPRX is that if either during Asia or London session, banking institutions got to sell from a premium area, and it's about to be New York session, okay? So price action is about to roll over from London to New York session. And the market makers prior to this New York session, this yellow circle is going to indicate where New York session opens. Let's just pretend. We can see sold from a high. We know here at CYPRX that the market makers during New York session are smart enough to not sell from a low. So if they are going to sell, and that is a major if because we don't know if they are going to sell or buy, we know at least that they're not going to sell from a low. Bank and institutional traders are not stupid. They're not going to sell from a discounted area. No, they're going to push price up into a premium if they are going to sell, and they're going to sell from where previous Asia and London session traders or banking institutions sold from. So with that knowledge, okay, that was supposed to go down. With that knowledge in mind, look at where price action was during this New York session. This is now going to lead us into how were we able to capitalize on this trade today, okay? Just by understanding some of those simple concepts that banking institutions are not going to sell from a low. They're most likely going to push price action up into a premium in comparison to where other banking institutions sold from here and here, right? Alongside that information and knowledge, we also know the manipulation window during Asia, London, and New York session exists prior to every single session. So again, keep in mind what I just taught you guys is that retail traders are most likely chasing all of this bearish price action that has rolled over from London over to New York session. They're getting scared. They're seeing all these bearish engulfing candlesticks, and they know retail trading patterns and retail traders, they study these bearish engulfing candlestick patterns, which is a sign to a retail trader to sell the market. So New York session traders that are most likely waking up at about 3 or 4 a.m., they see all this bearish price action from London, and what do they start doing? They start dumping orders here, chasing the market again at intermediary highs, which here at CYPRX, we know this is not where institutionalized traders are selling from. Where are they selling from? They're unloading positions and have already unloaded positions at these highs over here, where previous New York sessions sold from. This is now all just a continuation from where previous institutions during London and New York started unloading orders. You guys see, right? So knowing all of that information and having, remember, this discounted area that we generated from all the way back in February on the higher time frame, where banking institutions bought at a discount here, driving price higher above the psychological level 16000, we were going to be bullish above this level, especially if the market makers came back for this retail liquidity trap that they set up all the way back in February. Okay. Keeping all of those things in mind, now let's go and pay attention. So we have covered trading against the retail herd. Now let's go into detail identifying liquidity in the market that exists during our manipulation window that we've identified here at CYPRX to not be a market participant in. The majority of the CYPRX traders know to sit on their hands during this manipulative window, which is the window from when London session rolls price action over to New York and New York banking institutions start to take control of the market. Okay. Remember that these market makers, whoever you want to call them, whether you call it smart money, institutional traders, whatever, just know that they all work together. Okay. These central bankers, okay, these major money market institutional traders, let's say like the DTCC, okay, the clearing houses, they all work in tandem with each other. All right. It doesn't matter if they're central banks or major clearing houses. Okay. The people that move the money. All right. They work in the form of time at the bottom of your charts and price to the right of your charts. That is why, again, I've showed you guys in detailistic perspective in past video breakdowns, TradingView is set up this way for the retail trader to be distracted. You guys see all these numbers up here in the form of time parallels that you can go to. Okay, you can go to the daily, weekly, 12-hour, and so all the way down to the seconds chart. All right. You guys have all these tools over here that are utilized, all these freaking indicators. Okay. Remember that smart money, the major players in this market, they use none of that. They use time down at the bottom and they use price over to the right. Okay. When you know that, you can become an efficient trader in this market. So moving on, identifying liquidity in the market to give us the ability to be patient and sit on our hands. Here at CYPRX, we do not trade this window right here, which is our manipulative window during New York session, the London to New York session rollover. We avoid that. And we identify where retail money, impatient traders, okay, the novice trader facilitating orders into this market prematurely exist. And that would be beneath lows and above highs. Again, those intermediary highs where we know market makers are not selling from. So if we know a couple of different things that market makers are not going to sell until price is most likely back up at a premium where they sold from before, either during this New York session or at a premium where Asia or London session sold from. And we also know that they're not going to push price down further because they're not idiots and they're not going to sell at a low. Again, a discounted price where banking institutions bought from in the past, identified by this blue line. Then we're going to look to capitalize on a reversal. Okay. If the market's not going to go down, it's only going to do one of two other things, which is consolidate, moving to the right at a consistent basis, or it's going to break out and move and reverse back to the upside, okay, clearing out liquidity above highs. So with that being said, watch how price action plays out. We're going to go over a couple of different things here, some CYPRX confluences that we pay attention to, which is identifying a liquidity grab in the market, paying attention to how price does or does not break psychological levels, and how structure starts to form after those psychological levels are rejected and liquidity is grabbed from the market. Okay, so let's just talk about a couple of different logical things here as to how we were able to facilitate a beautiful risk to reward ratio in this trade. We're going to talk about entries. We're going to talk about what the market did after it grabbed liquidity, showing us a sign of a potential reversal in the market, and then logical take profit areas to give us confidence to hold our trade through the entire position. Okay. So first, we're now going to scale down to the 1 minute chart, keeping in mind, all in all, we were attempting to buy at a discount from, again, this blue box that we had extended all the way over to the right from the left-hand side, where we had identified in the past on the hourly chart, London institutions were buying from. Okay. That it plays an important role. You always want to be buying at a discount from where higher time frame, we know that these institutional players, they use the higher time frame, monthly, weekly, daily chart, okay, are buying from. So right when price breaks out of our manipulation window, you guys can see they set a pre-engineered low in the market in comparison to where retail is buying from, all beneath these lows here, right? Prematurely to the meat of the New York session. In my personal opinion, you just need to know how to read structure properly and react to it, okay? Which we're going to get into in this tweet right here, being a reactive trader, not an impulsive trader. And when you know how to identify, set up liquidity traps in this market and react to major psychological level rejections, all in tandem with time, it is super easy to capitalize on market movements, okay? Which is, again, how we teach our students to react to the markets here at CYPRX. So here we see a pre-engineered low in the market. Here at CYPRX, we wait for those lows to get manipulated and taken out of the market, okay? We also pay attention to psychological level rejections. Here's that psychological level that, again, Justin had called out way back on March 8th, a couple days ago, to the CYPRX students. We rejected that. Now, I want you guys to pay attention to structure before this move happened. We see a low in the market that was violated by a leg down, okay? So this is a break in market structure or bearish order flow, correct? Okay. Then we see another lower high and a new lower low in the market. So the bearish order flow continues. But for the first time, again, after price breaks out of our manipulation window that we attempt to avoid here at CYPRX, because we know impulsive retail traders orders exist all here in this area that are trying to chase the market or prematurely guess the direction of the market prior to the meat of the New York session, we're simply sitting on our hands. And right here, for the first time, we see two things: a rejection of a major psychological level, which over to the right-hand side is the 160.00 psych level. And we see a higher low come into the market that leads to a break in market structure, higher low, higher high formation. So again, this is a failure swing low formation, which signals to us here at CYPRX that if these market makers were going to attempt to push price any lower, if they had any interest in lower psychological levels for their targets, again, remember, every single trading session has an allotted amount of time to make a certain amount of money and move price to a certain parameter or area during their session, okay? So if they have no interest in liquidating lows anymore, where's the only other place that they're going to be able to make money from and profit? Remember, these institutions, these clearinghouses, they are profit-driven organizations. They want to make money. And if they're showing us an interest not to make money from scooping out liquidity from lows by showing us failure swing lows in the market and instead creating new bullish legs that break previous market structures. So now this is a break-in structure right here. Okay, this high was now taken out. Then where most likely are they more inclined to go and target? Remember back here, we told you all during the manipulation window, retail traders are selling, chasing the market at these intermediary lower highs in comparison to where the bank and institution sold from all the way up here, because they see all of this bearish price action and they think that there's going to be some type of continuation, failing to realize the bank and institutions are simply buying at a discount from all the way back in February over to the left-hand side from where they left behind, again, that retail trap in the form of a triple touch of a trend line right here, again, that was identified and shouted out to the CYPRX students ahead of the curve, okay? Keeping all those things in mind. Let's jump back down to the 1 minute and go into detail, okay? So failure swing low in the market, and instead we see a higher low, higher high coming to fruition. That for us here is a green light, again, in comparison to some of the things that I've taught you guys in the CYPRX page before and in the past. We want to see that low in the market get violated, which it does right here. And then we are taking our Fibonacci again, which is a tool, okay? It is a tool, a simple tool. It is not going to gauge the future price direction or anything like that. It's not some magic, but no, it is a tool for you to potentially determine where discount is going to be under the assumption, again, that market makers, if they are going to drive price higher, must facilitate multiple orders into the market. They cannot just put in one order. Why? Because that would just be one massive green candlestick. They can't do that, okay? With that being said, where are they most likely inclined to do that? They are most likely inclined to put in a second order at the higher low that comes in after the low that swept liquidity, and that would be this higher low right here. So where we were taking our Fibonacci from this morning here at CYPRX, you guys can see some screenshots from other students capitalizing on this trade entry. We were taking our Fibonacci from this higher low that broke previous market structure, dragging it all the way up to the high. And then we were waiting for price to come back down into a 70 to 79% discount in comparison to where the banking institutions bought from here after they manipulated price and swept liquidity from a pre-engineered low in the market. Okay. Again, failing to break major psychological levels and respecting that higher time frame discount all the way over from the beginning of February on the higher time frame. Okay. Keeping in mind the things that I taught you guys just a second ago, where's price operating at during this New York session? At a low in comparison to what? Where again, the banking institution sold from at a high during London and Asia session. We know now a couple of different things. New York session traders are not stupid. They're not going to push price down even further. What are they going to do? Push price higher to liquidate any retail traders that were selling at these intermediary highs, guessing that the market was going to continue down even further. Okay, again, because what are they doing? They're analyzing these bearish candlesticks. They're FOMOing out. They think the price action of GBP JPY is going to melt off the face of this earth. Ain't wrong. Pay attention to detail. So think about it. Starting from the higher time frame, what were our confluences? We had a higher time frame discounted area paying attention to. Over to the left-hand side, we had that area of trendline liquidity that we were waiting for the market makers to come and scoop out of the market. We also have psychological level majors that the market makers failed to break, showing us and signaling to us here at CYPRX that they have no interest in pushing price below these targets and maybe have higher targets in mind. Well, where are those higher targets potentially going to be at? Again, above highs, if not beneath lows, above highs where retail money during the manipulation window most likely exists. And you guys can see exactly where the market makers push price into, which is this whole entire area where you can imagine retail trading stop losses exist that were, again, selling here prematurely to the meat of the New York session, guessing that the market was going to continue down. Okay. You guys can see how we trade against retail here at CYPRX. Again, after retail money gets taken out of the market, you can see that they attacked all the way down to the triple touch of the trend line right here beneath this low, buying from a discount from where they bought from in the past during this London session that drove the market higher. This was a beautiful risk to reward setup that multiple students across the board caught today, utilizing the CYPRX confluences that we teach in detail in our course material. If you guys have been viewers of our channel for quite some time and have been interested in joining our mentorship program, don't forget that we are hosting a discount right now, all the way up until about next Friday. If you guys go to our checkout page and type in at the apply coupon code section, green15, all caps, you guys will get 15% off of our mentorship program, over 60 hours of in-depth course material, taking you from a beginner's perspective to an advanced perspective on how to read the charts with technical and psychological analysis. I hope you guys enjoyed this technical breakdown on how we were able to catch a beautiful risk to reward on GBP JPY today. And I'd like to just leave you guys with this. If you're still here, smash that thumbs up button, subscribe to the channel. We do appreciate the love and the support. I said to you guys just the other day, in order to become a successful market participant, whether you trade crypto or forex, you have to be willing to improve on a daily, weekly, monthly basis by setting yourself small attainable goals that fall in line with your long-term vision. You must also have the ability to maintain emotional superiority. You will only become a superior trader when you become a master at separating your feelings from the market movements. This means you need to be able to adapt on the fly as market conditions are forever changing. So think about this statement right here and the analysis that I just gave you guys. Retail traders coming into this New York session. Let me just replay this price action during the start of the New York session. Okay. What are they seeing here? Without the analysis that I just gave you, and you know now that price action went up in value. Okay. Imagine yourself as a retail trader that knows no strategy, okay, and has only been taught retail methodologies. Well, most likely what you're seeing is that this is some type of break of structure right here, okay? And that price action right now is super bearish because of these bearish candlesticks. So what are you doing when the market breaks price action structure again right here, creating a new low in the market? Most retail traders trade breakout patterns. So what are they attempting to do? They think that another leg down like this, right? I know that you've seen those traders that are like, oh, if you see another breakout, just copy and clone this, right? And then put it down here. And then that's another leg down that we're going to get, right? So this is what retail traders are expecting. Ain't wrong. Remember how we just taught you guys how to gauge areas of interest in the market from where previous banking institutions bought from, and how market makers are not going to sell from a low in comparison to where other banking institutions sold from, leaving behind liquidity traps and signals that they're going to come and attack these highs in the form of equal highs in the market, or retail resistance areas where retail traders' orders most likely exist, right? They're probably selling from here as well. Okay. What are the market makers going to do? They're going to come and they're going to attack these stop losses. They're going to come and activate these buy stops that exist above these highs for market participants who are also going to be willing to buy in the form of another some breakout pattern, right? Activating their buy stops and liquidating any stop losses that exist from sellers above these highs. So think about that in terms of what I just said to you guys again. Okay. You must have the ability to maintain emotional superiority. Stop trading with your emotions and become more so of a fundamentally based, technically based trader that has psychological superiority over this market. Okay. This market, again, remember, is designed to tap into your emotions. All these tools over here, all the indicators that everybody tries to sell you on the internet, indicator-based strategies where they charge you thousands of dollars to join their mentorship program. Here at CYPRX, we trade none of that. Straight naked charts, technical analysis, no indicator-based trading, and paying attention to how we control our emotions in this market in depth. Make sure that you guys use that discount code. As always, many blessings to you guys. Hope you all enjoyed this video breakdown, and I will see you guys in the next YouTube video.
I won't stop till I hear him say,